Welcome back to part 4 of the pipeline series. ONEOK, one of the largest gas and NGL pipeline players in the USA, over 5% dividend yield, predominantly fee-based revenues, and a vast network. Is ONEOK a buy in 2025, or is its debt holding it back? Who is ONEOK? A midstream company with over 60,000 miles of pipelines in the Permian, Mid-Continent, and Rockies. Over 90% of earnings are fee-based, much less commodity price risk and very predictable cash flows. Altogether, I hold 3 shares. My entry price was €67.26 per share. Currently, I am at an unrealized loss of minus 6.55%, and I have already received a dividend of 65 cents. Revenue is currently at 28 billion with an EBITDA of 6.8 billion. EPS is at $5.10. We have a P/E ratio of 15. We have gross debt amounting to $32.5 billion US. Net debt to EBITDA is at 3.8. In the midstream sector, between 3.5 and 4 is completely normal. ONEOK is a bit above that, but wants to continue reducing debt. Now let's take a look at the dividend. We have seen dividend growth of 3% over 5 years and even 8.66% over 10 years. The payout here is made quarterly. The current dividend yield is 5.65% with a payout ratio of 79. We have had uninterrupted dividend payments for 55 consecutive years. The dividend is currently covered by the cash flow. How about growth and new projects? We have organic growth, including the expansion of refining, product systems. Towards Denver, we have Eiger. Express gas from the Permian to the Gulf. Here we have 10-year contracts, and completion is scheduled for 2028. Currently, we have structural tailwinds. We are seeing rising LNG exports, gas is replacing coal in power generation, and AI and data centers have a huge appetite for electricity. Now let's move on to the risks. Leverage is still elevated, currently at 3.8. The target path towards 3.5 must be achieved. Short-term liquidity, trade payables, monitoring is necessary. We currently have a PEG of 1.4, which means the market is pricing in. Growth is already factored in. Headwinds are possible in 2026. Some analysts have lowered their targets. Project and integration risks, timeline, capex, and synergies. The 52-week high and low are at 60 and 100 respectively. The low is at 60 and the high at 100. Analysts have set a target here of €81.21, and Investing Pro, based on 4 sell models, sees a price of €76.79 here. Then let's take a look at the Pro report. Here we can see the gross rating again. Here we see all the positives listed again. And here, the negatives, many of which I already mentioned in the video. I'll leave it up for a moment so you can see it again. But here you can also see again, as we already reported with the IG Express, that it is expected we will see EPS growth of 15% in 2026. Here we have the SWOT analysis again, that is, strengths, weaknesses, opportunities, and threats. I'll leave it up for a moment as well, and I'll move aside for a second for those of you wearing glasses, like me, so that you can read everything clearly and distinctly. And I'll scroll down briefly again so you can take a look at it in peace. Feel free to just pause the video. If you want to take a closer look at such fundamental analyses, you can find the affiliate link below in the description. With my link, you'll get 15% off Investing Pro. Now, let's take another look at the entry points where I'm planning my next entries. As we can see, the market has already performed well here too. Let's just take, for example, the year 2020. But just looking at the data, let's start there. Exactly, so where would my potential entry points be? I would only see my entry points around here again. So at minus 30% and also at minus 40%, among others. That means at €46.58. Exactly. So around this area, it would be really nice to get in. Then we are currently at minus 38%. As I said, I am definitely holding and would be very happy if the stock drops further. Currently, as I said, I am not buying more since I simply have my set principles. Only when my overall position is at minus 10% do I buy. Only after that and before that I just hold and collect dividends. So what is my conclusion? We have a solid US dividend payer with a strongly fee-based model and a 5% dividend yield. A broad network, a clear growth pipeline, but the main risk remains leverage. But the plan to reduce debt is in place for income. Attractive for investors, but less so for those chasing skyrocketing share prices. That's it for this video. I hope you enjoyed the video. Feel free to leave me a like and comment on the video. If you haven't subscribed yet, I would really appreciate it if you did. Otherwise, as always, this is not investment advice, but simply my personal strategy. I wish you successful investing and look forward to the next video. Until then.